Hi, this is R.N. Bhaskar from BKBB, which is an acronym for Bhaskar Key Business Baatein. Every week we come to you with a policy analysis, a business story, or a conversation. But at this time, at 8:15 on weekdays, we come to you with news behind the news. Thank you very much for joining in. And as usual, we look at news from a broader perspective, pick up some topics that we think requires commentary. And when we look at the news scenario today, the person who dominates the news scene is obviously Trump. And so some of the stories will relate to Trump and some with the working environment. But before we talk about what we're going to discuss, first, let me remind you about the usual stuff. Please click the subscribe button if you've not clicked it already. Please click the like button. That is something that makes us extremely happy. It helps our algorithms with YouTube. But most of all, please tell your friends, all the people you know about us. We need more people to know what is actually happening, what is actually the news behind the news. And let me introduce my co-anchors to you. I have Katya. Welcome, Katya. Good to have you here. And I have Anurag. Welcome, Anurag. Nice to see you. And today, we are going to discuss 3 different topics. And the topics can be seen on the screen. The first is about, obviously, US and China and the peace accord and the accord they've reached on tariffs, though only for 90 days. The second is on how the US flip-flops on the pharma trade, pharma tariffs. And the third is basically about how, when we look at comparative PMIs, India looks great. But when we look at unemployment, the picture is dismal. And let's take the first story. And before we go ahead, just let me remind you, at the end of the session, we look at some of the comments and questions that have reached us, and we try to answer 2 or 3 of them. Let's take the first story. The US and China, after a long time, ever since Independence Day, on April the 2nd, finally arrived at some kind of a resolution on tariffs. It was not back to old times because the tariffs still remain. It's 10% for US products into China and 30% for Chinese products into India, into USA. But 30% is better than 145%, and 10% is better than 125%. So both sides have done a little bit of give and take. And in this give and take, you find that the marketplace is going to be very jittery because it's only for 90 days. Some of the superstores that had already placed orders with China, irrespective of the high tariffs, will be grinning because now the products will get sold quickly. But nobody is going to go to supply lines if it's only for 90 days. It's going to hurt USA, it's going to hurt China, it's going to hurt the world, and this will mean more disruption of both trade and business prices. Expect inflation, which is already set into America, to go up even further. Then there's another story which I'm not going to discuss, but I just mentioned it over here, and that is the other thing Trump talked about was the pharmaceutical industry, but that is a story that Katya will discuss. Katya, over to you.
So Trump is doing damage that is going beyond tariffs as well, sir. So in fact, this is actually a continuation of what he has done in his last regime. Also, in last time he was the president, he had broken the back of margins of a lot of generic exporters from India. pharmaceutical products. And this time it is going to be a little deeper and a lot more fractured, because we have the tariff, and on top of it he is also cutting down the drug prices in the US. Now how that will play out in the US we do not know, because the drug lobby in the US is very very strong. But currently, if you, but this mostly actually this is for branded formulations, not for generics. But if branded formulation prices come down so much, because there is a lot of price gap between formulations and generics, generic prices will also have to come down, which means again margins will be hit. And this is extra uncertainty over a lot of uncertainty that's already there. If you remember, first he actually said pharmaceuticals are excluded from tariff. Then he said, I'm going to come up with a special way to, special way to special tariffs for them in different way. And then again he kept changing his word. If you actually look at it, the pharmaceutical stock prices are looking like the ECG meter of a person with extremely high BP. It's going flip up down. The flip flop is actually starting to affect investors a lot, because they do not know which side to go on. So this is exactly, it's a very very spooky time for pharmaceuticals. US is a very big market, as we already always say on this show. For pharmaceuticals, it accounts for a third of our generics exports, and pharmaceuticals is also one of the biggest exports of India itself. So this is a huge impact on India. So let's see what will happen, because we do not know how it's going to play out. Until then, pharma stock investors, beware.
Thanks, Katya. In fact, out of the 29 point something billion exports of pharma from India, 30% goes to US. So the pharma sector in India is definitely affected. But my big worry is that while Trump may want to bring down the prices to please his voting public, the pharma lobby in America is a very powerful lobby. If they will see their profits being shrunk for one reason or the other, what will they do? Maybe it's too late for them to do anything right now because the election funding is over. But anger can spill over into the next season. The pharma sector is a dangerous sector. It's a volatile sector. And Katya, I loved your imagery of an ECG display, which goes up and down. Nothing could describe it better than that. Thanks, Katya. And now we go to the third story. And the third story is again contradictions. Anurag is going to talk about the contradictions that exist. Anurag, over to you.
Good morning. Today's report is about India's surge in manufacturing and services and the Purchasing Manager Index, PMI, being the highest in the world in the month of April. But does it translate the same for the increasing unemployment among the youth? Let's find out. The report data by the JP Morgan highlighted that for April 2025, India's manufacturing PMI stood at 58.2, while its service PMI came in at 58.7. These are the highest figures among both developed and emerging markets in the world. The PMI is an important economic indicator derived from surveys of private sector companies providing insights into the health of the manufacturing and services sector. It measures key aspects like employment, output, prices, and new orders to assess the direction of economic activity. A PMI above 50 shows expansion, while below 50 indicates contraction. Compared to the other large economies, India is doing significantly better. For example, China's manufacturing PMI, tracked by both market and the National Bureau of Statistics, stood at 50.4 and 49 respectively in the month of April. Similarly, the US manufacturing PMI conducted by ISM was 48.7 and services PMI was 51.6, just at or below the threshold, indicating sluggish growth or even contraction in services. This is a good news to boost the morale of the economy, but the on-ground reality speaks a different language, which does not translate to the growing unemployment rate amongst the youth. According to the latest Periodic Labor Force Survey, PLFS, India's urban unemployment rate for people aged above 15 years remained 6.4% in the month of December also the quarter of the financial year 2025, where joblessness and unemployment rate is defined as the percentage of unemployed people in the labor force. It also highlighted the unemployment rate for the youth, for people between the age of 15 to 29, which increased to 16.1% in the third quarter of the financial year 2025 from 15.8 in the second quarter of financial year 2025. It was led by a rise in the jobless rate for both young men and women. Additionally, labor force participation rate (LFPR), which represents the share of people either working or seeking employment in the urban population, remained steady at 50.4% in the third quarter. Men showed greater enthusiasm for work, increasing their LFPR to 75.4% in the last quarter, as compared to 75% in the same year in the previous financial year. Meanwhile, the LFPR for women workers fell to 25.2% from 25.5% in the same period. What's your take on this, sir?
Important story. And I'm extremely worried about the unemployment numbers. In 2022, if you remember, the ILO had come out with a figure which said that 80% of India's youth is unemployed. Now you've got an increase in the unemployment numbers, but they've not given the actual number of youth unemployed. And I expect the restlessness among the young to increase, and that is a dangerous sign. Most trouble, most political upheavals, most social violence takes place when the youth is unemployed, and that is what is happening in India. The PMI may look good comparatively, but unless jobs get created, neither will a PMI go up, nor will national wealth. You have a crisis. And that brings me to the end of today's session. Thank you for listening to us. But let me talk about a couple of questions that have come in. And the first question is, what is the solution to unemployment? Well, the solution to unemployment is to create more employment opportunities. To create more employment opportunities, you need to bring in more investment. Investment for foreigners, investment by Indians. But Indians are busy investing overseas because the investment climate is healthier overseas despite the turmoil. In India, the investment climate is not very good. So people don't invest in India, neither the foreigners nor Indians. So you have a problem. And if that problem is not addressed, if the investment climate is not improved, unemployment will remain high. And that takes me to another comment. Pharmaceuticals is important for India. So what does India do? Well, India has to find new markets. Unfortunately, the government is looking at the same markets over and over again. Go ahead. The Commerce Ministry spends more time in Europe than in Southeast Asia, where large markets exist, where the population of Indonesia and Malaysia and in Africa, the markets are big and generics work very well there. But that means a little more work. And I can't see that happening. So you can't solve. America has to deal with its own problems. If that American problem spills out to India, India has to find other markets. Please remember, China last year had a surplus export income of $1 trillion. What is interesting is 50% of that money came from non-European, non-G7 countries. Which means what? That China has managed to find new markets and is not totally dependent on one segment. Anyway, that brings me to another question, and that is, what do we do about China and USA tariffs? Will that improve the business climate? Temporarily, yes. Please remember, it's a 90-day window. So the uncertainty will continue. Expect a turbulent ride for the world. It's on, off, on, off. As Katya said, it is like the ECG display on a screen. Anyway, that brings me to the end of today's session. Please remember to click the subscribe button if you have not clicked it already. Click the like button if you like us. And most importantly, tell all your friends and people you know about us. It's a request because we need to build audiences. And lastly, have a wonderful day. May your day go well, and see you once again tomorrow morning. Take care. All the best.